Hi, everybody. This is David Skarica, editor of Pessimism.com. Today, in our series of interviews with opportunities in small caps and junior mining, we have Bruce Bagnello, who is the CEO of Regency Silver, who we've talked to in the past. They have been a marketing client in the past, just so you know, full disclosure. They're not a marketing client right now, but I own quite a bit of the stock. Actually, me and my family, including warrants, I probably own north of 1 million shares. And recently, the company has been drilling. They raised $4 million a few months ago. They have been drilling in Mexico. So, Bruce, maybe you can talk, just get right into it. Maybe a little bit about your past. We've done that in the past, but just for anyone who's new to the channel, talk a little bit about yourself and then maybe talk about your drilling program. You've sent me a couple pictures of the core. And obviously, you got to send it to the lab to like show the actual grades. But just maybe talk about what you've seen and how the drilling's been going and that sort of thing.
Yeah, sure. First of all, it was great to see you at the Centurion Conference
Yeah,
in the
NASA. Yeah,
Bahamas.
that was
Yeah,
great. That was
don't
great.
get a chance to get to that part of the world very often.
Yeah, yeah. So,
So
well,
that was
remember,
good.
it's kind of
Great
easy
conference.
on the way to Peru though, because we're kind of in between, especially if you fly through to Toronto, right? You can stop
Yeah,
in Nassau and then so there, it's not as hard as it used to be. And actually, I don't know how you know, you went back to the States, but you we'll get into the drilling in a second after the little small talk. Copa actually has a flight through Panama City to Peru. So if you want to avoid U.S. customs, you can do that too.
yeah. I don't really have any problem with the U.S. I mean,
So,
it's
yeah.
fine.
So no,
Yeah.
it's Panama's just an easy hub though, because you actually don't have to clear customs there. You just go in the terminal, right? So
Okay.
yeah. But
That's
anyhow, so
interesting.
yeah, if you want to tell us a bit about yourself, you have
Yeah.
an interesting background. You've actually have a history of putting companies into production, of selling companies. And you have a history in Mexico as well.
Yeah. Well, first of all, I think the biggest thing is I'm always trying to build assets within the company. We did that at Timmins Gold. We took a past producer, uh, built up the crushing circuit because we recognized that we had to get a new crushing circuit, and turned that into a 100,000 ounce a year plus producer. With Silvermex, I was involved with the initial part of the story, took it public, got some good assets into it, handed it off to somebody, and then they managed to sell it to First Majestic. With Regency Silver, we recognized that the sweet spot in the market a few years ago was for exploration companies. There wasn't enough capital around at the right price for development stories. So the sweet spot at the time was exploration. Now, right now, I would say producers are the sweet spot because they're making
Yeah.
so much money because of the metals prices. But I've been working down in Mexico for well over 20 years now. I understand the country very well. It is improving as far as what's happening on the ground. They are making some pretty positive statements about revising things so that it's easier to get permits, easier to get new concessions, all that type of stuff. So Mexico is improving. So I think any stigma in Mexico is vanishing, and it has just a wealth of minerals down there. It's a fantastic spot to find new, new targets and new mines.
Well, I think with the whole political situation is, with these resource prices, especially gold, silver, copper, almost anything where they are right now, maybe other than oil and gas, it's always going to change a government's philosophy because we know the way governments are, they're money hungry because they're going to see the amount of revenue they can, generate from this. Like, in terms of taxes, government revenue, income tax from miners who can work, a producing mine that's now probably can make a lot more money itself and the miners can make more money. And so I think that kind of changes the game for maybe a lot of these countries, even if they weren't pro mining to start with. So,
Well, Mexico's always been a pro-mining country, which
yeah.
is why it's unusual to have a regime that isn't pro-mining or is not perceived to be as positive as the previous ones. So it's interesting that you say that, because when we had Timmins Gold, we paid big money in taxes. We brought foreign investment into small areas small towns that didn't have any investment from the government in a lot of cases. So we don't look for government handouts in mining. We're not looking for any subsidies. All we want is a fair shake. And that brings a lot of foreign investment. If you can get that fair shake from the government, that really helps with foreign investment.
Well, and then also too, you're talking about that. I know one of the you're talking about production models right now is like a company will go into a country and say, especially in Central South America, and they can work with all the small miners and help them be more efficient in mining it and processing the ore and selling, and take a cut or a royalty or whatever it may be or a percentage, and everyone kind of makes more money. And for this, say a small publicly trading company that's producing 25, 50,000 ounces a year. That's how they can double or triple that production by working with those small miners. And it's kind of good for everyone in the end. And of course, and especially you're in Mexico, but when you're in places that have large indigenous population, especially in Central America or Peru or something like that, of course, a lot of that money can funnel its way back into the indigenous towns and areas which tend to be quite depressed.
Well, yeah, I mean, mining takes place in areas where the government doesn't really reach.
Yeah.
It's usually remote areas that don't have any real agriculture. We're usually in a mountainous area without much agriculture, without a lot of social services in a lot of instances. So mining is a real benefit to these communities. We pay really good wages. And in a lot of cases, if there's artisanal miners, they're using chemicals that aren't good for the environment.
Yeah, yeah,
We can
yeah.
clean up the environment using modern mining techniques and processing techniques. So it's a benefit to a lot of these communities to have a Canadian mining company go in there and be subject to the regulations that we're subject to. For example, the air in a Canadian mine is far superior to the artisanal miners because we have a lot of good ventilation procedures in
Yeah.
Canada. Whereas in a lot of these places, they don't follow the same safety standards, the same ventilation standards, the same mining techniques. So it's a lot better for a Canadian company to go in there and do the mining.
And just to expand on that as well, in terms of a Canadian company going down there, and you said in these areas, like really, you're going to need a company that's got to raise money some way too to drill in there. Because let's face it, the Mexican government or probably Mexican business community is not going to come up with a bunch of money to mine a property way in the middle of nowhere in the mountains or the desert or et cetera. And that goes for most of South Central America or even Africa. So that's another thing too, is you're tapping into venture capital and capitalism from places like the United States and Canada and the UK or wherever. Of course, like UK has a huge mining sector, for example, but not in the country, obviously. Like a lot of these large cap miners that we know of, you would be surprised, are UK companies. A lot of the large producers, and of course, they're getting money from international investors and then able to spend that around the world and like you said, employ people, pay good wages. Like we see that even in a place like Canada, where in places like Val-d'Or or Northwest Territories or Yukon, places that would otherwise be probably pretty depressed, people can get six-figure jobs as a miner.
Well, I grew up in Timmins, Ontario, and when the mines weren't doing very well, the town suffered.
Yeah, of course. Yeah.
And now that mining is back again and the prices of the metals are up, there's been a renewed interest in the city. So you go through these boom and bust cycles in mining.
Yeah.
And when it's booming, our setup works very well. Our regulatory setup, the TSX Venture Exchange, the
Yeah.
TSX, they work very well. They're a very efficient marketplace for raising money. And now the money is starting to flow back into the sector again. So it's really good to see there's money available for drilling and exploration and development.
And with exploration, before we get into your property now, I think that's another note too, is that Americans tend to their capital markets, even though they do venture capital, obviously have these big tech IPOs, but a lot of their capital, especially for example in the fracking sector and oil and gas, tends to be debt. Where with in junior exploration, because oil and gas is easier to produce cash flow quicker from a hole, in the ground, right, from a well. Where in junior mining, we need, to develop a property can take years. So you can't, debt doesn't make sense because you have no cash flow to fund the interest payments or to pay the debt down. So really like you said, the equity, private placements, warrants, that mechanism really works well with junior market mining, which is why the two largest junior mining sectors in the world are in Australia and Canada, because they both have those equity mechanisms to raise money to fund drilling. And again, I guess it's being spread all over the world because actually, ironically, I'm sure you can attest to this. Canada's a very, in my opinion, not the jurisdiction it used to be for mining or for exploration. So now we can use that Canadian market mechanism to explore in Mexico, Colombia, Peru, Brazil, wherever, in East Africa, wherever it may be.
Well, it's very heavily regulated in Canada. People don't seem to realize
Yeah.
this, but it is very heavily regulated. So it's a marketplace that has stood the test of time, and more money is flowing into it now than probably ever. And we're going to see some real good moves in the stocks because of the flows of money.
Yeah,
And the rising tide is rising up all the
uh,
ships, right?
and I think this is one thing where like this is unrelated to mining itself solely, but I do think the advent and the boom and kind of the crypto market and these little, like, we would never speculate in them, but the altcoins, that's actually a positive thing at some point for junior mining, because the same kind of Gen Zers or the whatnot that are attracted to those, they're young people, they're going to be more they're going to have higher risk appetites, less adverse to risk. So the closest thing to an altcoin in equity markets is probably a junior miner that's exploring, right? Because it doesn't have any profits. It doesn't have any cash flow. It's just looking for something. And anyone, even a young person, because I got involved in my early 20s in the late 90s or mid to late 90s, any person that can see at these prices, $57 silver, 4,200 gold, 510 copper, you can generate a ton of cash flow if you can find something economic in the ground. So I think for the first time in my lifetime, other than when I started out, when I was in my early 20s, you're going to see younger people like attracted into the sector because now there's the opportunity to just, quite frankly, make money in it.
Well, that's what attracts investors, right? The ability to make money. So
Yeah.
these high prices are going to start to be reflected in the price of the stocks. I mean, I
Okay.
don't think anybody has really caught on yet to the fact that gold is 4,200, silver is, at an all-time high. So's gold. So you look at that and you say, why isn't there more investment? Well, it's coming, and it's going to attract a lot more investors right across the board.
And another thing to expand on that, another aspect, expand on that before we get into your actual drilling, in terms of those prices, is we have like input costs, like oil and gas being low is really good, as you know, because the cost of diesel, gasoline to fund your equipment, or run your equipment is one of the big input costs. So that helps the margins and cash flows too. And and like you said, it's not just young people; it's institutional money. Like when we went to the Centurion conference, I was impressed with the amount of what I would consider to be very high-end investors. Probably guys with a lot more money than me, who are really interested in the mining industry. And again, I haven't seen that before. Like if you talk to some guy, I don't know, it didn't even have to be from Silicon Valley, if some American who, I don't know, lived in Dallas or lived in New Orleans or Miami, they would all be more interested in tech and AI or something like that in past years. But now I'm really seeing people actually interested in mining. And I see that, like, for example, the views I'm getting on my website, because I do a lot in mining, and my YouTube pages, like things have really, really picked up. So I think we're finally there. And to expand, and I'll show a chart of this after I show the Regency chart, after we look at some of the drilling aspects, is that the CDNX is trading at around 900. Well, it peaked, I think, at like 30, north of 3,000, back in 2007. So we're seeing, like, we're still over 70% off the all-time highs. And what other sector with all these booms in equity markets since 2009 I can say that you're still buying it at relatively cheap levels?
Well, I think the statistic is that the global investment in gold is something like 0.4%
Yeah.
of people's portfolios. And it used to be that 4% was considered, kind of an average proportion
Okay.
of assets in your portfolio. And I heard and I read that somebody was calling for putting 10% in.
Yeah, yeah.
Well,
Well, and
10% would
I
be
I
a
think
massive increase in the price of gold and also in the equities.
And I think like at past kind of like tops, like 1980 or 2011, like tops that lasted say for a decade or something in the gold equities and gold itself. I think like it gets up to 15 or 20%. So and another aspect about this before we get into your actual drilling from a macro point of view is I don't know if you know who Ray Dalio is, but he is the largest hedge fund manager in the world. And or he was, he's retired now, but he's a big gold bull. And Dalio has said too, what makes this unique is this is not so much a trade like the other cycles. This is more like a currency revaluation where because of all the debts, these big governments and unfunded liabilities, the United States, Canada, every Western European country have. This is more like their currencies are being reset because they already have, but they're gonna have to print even more enormous amounts of money to pay for all these liabilities. So you can't even just view this as a trade. It's more like a reset, because of where we are. I guess the only comparison I could give maybe historically is, what happened to the valuation of, say, Roman coins compared to gold or silver or copper back in the, third or fourth or fifth century when Rome kind of like, had to devalue because again, all the large debts and expenditures they had to pay for. So,
Well, you know what
and
happened? This is where the term coin clipping came from because they
yep.
used to clip little bits of gold or silver. It was mainly silver back in those days. They would clip little bits of the coin until there's hardly anything left, and then they started debasing it by putting in base metals. So instead of precious metals like silver and gold, they would put in other metals to make it less valuable or less costly. So until eventually people just wouldn't accept the coin anymore. So we're kind of in that situation right now with currency devaluation relative to gold and silver. And I tell you, I've always really liked gold and silver. I mean, I do like copper as well, but gold and silver are the main metals that I like.
Yeah, yeah, yeah. Me too. Like I like copper, but and again, I said because of this currency devaluation things, I know I've always been big on the technical ratios, showing gold compared to oil and gas, gold compared to copper. I remember in 2009, for example, when gold had quickly rebounded to 1,000 after the financial, or actually near the depths of the financial crisis in March of 2009, and copper was 150. I actually was buying more copper because I figured copper had more upside, and in the next say 12 months, gold went up 30 40% I think, and copper went up like tripled. So like yeah, I know there have been times like that, but again I think because of the unique monetary aspect to what's going on now and that government debt situation, I'm still kind of just going to be holding my gold and silver, and I think a lot of those ratios aren't going to work like they've worked in the past because gold and silver are your monetary metals, right? They're not, obviously silver and gold all have industrial applications, but they're really your monetary metals. Like they're your dollars and cents of the precious metal. So let's get into what you're doing with the company. Now, you raised $4 million. I think if I'm correct, those Centurion guys took down a bunch of it. I did a bunch, and some of my people did a bunch of it too. It was a 10-cent financing with a half a warrant at 20 cents. It was actually originally five. You rolled it back the stock one for two, which I think was good because that got rid of a lot of, I think, the smaller type people that would have just sat on the stock. And you've seen it. Like there doesn't seem to be a lot of overhead there, and the stock's about 21 cents. I actually added it to it in the mid to late teens over the last few weeks. So, talk a little bit about the financing and now the drilling. And we're going to show the drill at work and we're going to show some of the core coming up here.
Sure. Yeah, I mean it was great because Centurion One really stepped up for us and raised us $4 million. I mean, we had to do a little bit of it ourselves, but that's expected. And they put their own money in, and now we've got a financial partner that we needed to take us to the next level. So that money that we raised is being used for drilling right now, and we're three holes into the kind of the follow-up program. We did drill one hole as a follow-up kind of a down dip extension of a previous hole that was drilled in 2012 by a previous option holder. And fortunately enough, we hit 30 meters. We hit good mineralization 30 meters after they stopped the hole.
Oh,
So
wow.
we've hit good mineralization on all of our holes that we've been drilling so far. And just this week, we drilled straight into the breccia that has previously been associated with high grade gold, silver, and copper. So
So,
we'll be putting out you'll see news by the time this video airs. You'll see news with pictures that we're about to show, showing exactly what we've hit, and it's as good, if not better looking than the previous holes we've drilled that had high grade gold, silver, and copper.
I don't pretend to be a professional geologist. I kind of know enough to get by, but I do have to say I know what core usually looks like, and we'll show this in a second. What this core looks like is amazing. It's just a mixture of like colors, and you can see the mineralization. And you know better than me, being a CEO of these companies for decades, you don't usually see that in core.
I used to work at Kidd Creek up in Timmins, and the core looked like concrete coming in, but it was one of the
Exactly.
best mines in Canada, best base metal mines. You don't have to guess when you're in the good zone at Dios Padre. You could tell immediately. It just all of a sudden the rock just starts standing out.
So anyway, here's the drill at work. This is cool for some of you maybe who've never been on a drill site or seen it, so you can see them kind of in action. We don't have to play the whole thing. We'll just play a few seconds. So
Yeah, it's drilling's an interesting process. Those guys work
I'll turn the
really
volume down.
hard.
So actually, we can talk while we're playing it. So yeah, yeah,
Yeah, those guys work really hard. I mean,
yeah.
they're moving the rods around, they're drilling, they're picking up new core. They're picking up the core out of the rod. Oh, that's my finger. Then they've got to put new pipe down. Then they've got to take out the core from the pipe. I mean, it's quite a task. It's only for the fit and the young. We used to, I used to feel, I used to feel out of shape. I'll tell you. Well, I still do feel out of shape, but you see these skinny little guys, working on these rigs, and their pipe wrenches were bigger than they were, but they put in a full day in the heat in Mexico. So I give a lot of credit to our drillers. We got an outstanding driller on site. We use Bilsa Drilling out of Hermosillo,
Okay.
and they've done excellent work. They're producing the really good core for us. And hey, we've been lucky with them, so I got to keep going with them. They're doing a great job for us.
I'm gonna keep that running because we can come back to it. So this is what some of the core looks like right here. You
Well,
know.
that's the core from hole one,
Okay.
and you can see there's abundant chalcopyrite and pyrite in there. That's part of a quite high grade piece. That's when we first knew we had something big here. You don't see the copper associated with the gold and silver that often unless you're in a big system. And what we have here is we have a porphyry with a high sulfidation system. So it's very interesting. These types of systems are large and they're long lived. So you
And
get these multiple pulses of mineralization that could flow up. What's happened here is the rock has been broken up. At the porphyry source, you get steam built up and it's under pressure. It follows a zone of weakness and blasts up all the rock along that zone of weakness. And you can see in other pieces of core, which we're going to show you,
yeah,
how that
fragment.
rock gets fragmented. So that's another piece from hole one with abundant chalcopyrite and pyrite. And it gets fractured and then it kind of falls back in on itself, but there's still gaps in the rock and the rock is weak. So then you have these mineralized fluids
I'm just gonna
filling
show it
in
right now.
all those gaps in the rock. This is our processing area.
Just gonna show you
That
something.
that is a piece of core, very high grade gold from hole 21.
Okay.
And you can see the abundance. I mean, you don't have to guess, like I said, when you're in the zone. You can see it. So it's
And
quite
there's more of
something
the
to
core right
see.
there.
Yeah, and there's our core processing area. That's where we log the core. Nothing fancy, of course, but it's very efficient. It shelters us from the rain. That's I think that's hole 20. I'm not sure what hole that is.
And about how deep are you drilling?
Well, we're drilling from the side of a mountain right now, which
There's the mountain
is,
right there.
yeah, it's like halfway up that mountain. Where's that drill? Oh, you can barely see it. It's just up in that mid-range
Oh, I
level.
can see it. Yeah, if you really look
Yeah, you
closely.
can
Yeah.
barely. I was having a hard time getting a focus on that. So we're up kind of halfway up the mountain. So we're about 200 meters up the hill. So we're drilling. Well, we're hitting the zone at about 600 meters. So you take 200 meters off of that, and then you have to adjust for true vertical because we're drilling at about a 45-degree angle. So yeah, we're down about 350 meters overall.
Here's a
That's
couple
that
more.
same piece of high grade core. That's what we're looking for
Okay.
is rock that looks like that. See how it's
Okay.
all fractured up? You see those gray pieces? That's
Yeah.
the breccia.
Okay. Okay.
That's the rock that was blasted up by the explosive event. And then you see the infill. So those fluids come in and fill in the gaps. And in this particular case, where we're having our high grade areas, it looks like the gold all dropped out. It probably hit the water table. When the
Okay.
fluids came up, they hit the water table. And the water table would have changed at various times. So you have these different levels, we're calling them, of mineralization. So the silver mine is at the very top of this system.
Okay.
And the silver mine has the silver. It's high grade silver. They're mining 750 grams of silver out of that old silver mine. And that's the top of the system where the silver cooled at a lower temperature. And it cooled with the gold dropped out at a certain level as well. But we've got 40, 50 meters of high grade zone, and we've got 100 meters of mineralization. So this breccia is pervasive, and 100 meters in Mexico is a lot. I mean, you don't get these high grade systems with 100 meters unless you got something big on your hands.
So I just
So
want to show you a little more of the core. This is
this is just last week. That's the
yeah.
core we hit. It's the same zone. If you can zoom in on that, you can see the abundant. See all that good shiny stuff there?
Yeah.
There's pyrite, chalcopyrite. This is
So that's just
exactly what
that's
we were looking for. It doesn't show that well on camera for some reason. It looks much better in person, but you can see if you go to the other piece that's you can see some
the
chalcopyrite in there with the
is that the
pyrite.
picture? Oh, sorry, is that the picture before that?
Not that one. The one
One second.
just go up. There's the drill. You can see it a
Yeah,
little
now
bit
I can see the
there.
trail. Yeah.
Yeah.
One
But it's easy
second.
to drill here. Just
This one
keep
here, you
going
mean?
with that piece right there.
Okay.
Zoom in on that, please. Look at that. I mean,
Oh, you can see it right there. Yeah, right up here.
that
Yeah.
is an absolutely beautiful looking piece of core. I mean, I couldn't have drawn it up better. That's chalcopyrite with pyrite and specularite. The black mineralization is specularite, which is essential for the deposition of gold. And it shows you we're in a porphyry because it's an iron ore type of mineral. Look at the fracturing. Look at the geometric pattern to this. It's pretty impressive.
No, it's like I said, like I said, I'm not a geologist, but I have seen, I've been doing junior mining for over 25 years. So I've seen quite a few of these, and it's very rare you actually see what you're talking about, like the mineralization that clearly and close.
Yeah, it's the chalcopyrite really stands out. Now it's interesting in this zone because the chalcopyrite means we're getting copper, and we didn't expect to get copper in this zone, so we're back into this porphyry. So the we thought we might be out of the porphyry, or the porphyry is some kind of control on mineralization. So now we need to go up towards the silver mine. So the next hole we're going to drill is going to take us up towards the silver mine, and we'll hopefully hit another level in between these zones. So yeah, I mean this hole has been spectacular. We hit mineralization on the first two holes into this zone, but we didn't hit that high grade breccia that we were looking for. And then we went up dip a little bit, and here it is. So we've validated our theory here that it probably goes up towards the silver mine. So we're just going to follow it up dip now.
So I'm just going to quickly show the stock. So this is a stock chart going back just over 2 years. And you can see this kind of little like bounce you had recently. And technically, then you guys went back down to the 200-day moving average and it's moving higher again. And one thing I should talk about valuation is on top of these results you're going to produce, you have about 11 million ounces in silver already as a resource. And that's of course, the company has a market cap of about 11 million right here, Canadian. So let's just say 11 million US, which is about 30% higher than where it is now. So that'd be, say, I don't know, about 30 cents a share. You're only trading at $1 per ounce silver in the ground, and you're going to have these other results from this drilling come out.
Well, when you look at it, David, this is something I was looking at the other day. What is 11 million ounces of silver worth? Well, today's prices, it's worth $660 million.
Yeah, and you guys are
No,
trading
that's
at
the
8 million Canadian or US, I mean.
yeah, I mean that's the value in the ground, not to mention this high grade gold zone that we've hit, where now we've extended the zone along strike and up dip. So, we don't know what that is worth. We haven't done a 43-101 report on that. But we know there's extensive mineralization there. So you take that, you take the silver, the historic silver mine with the resource that we've put together, which is 43-101 compliant, and you say, what is all this worth? I mean, at current gold prices, a million ounces of gold is worth $4 billion.
Well, I know because
4.2 billion.
there's another company that was at that conference. It's my second largest holding, and they
Yeah,
have a resource of almost 4 million ounces. And their last, whatever, like feasibility study was done in 2022, and gold was 1,600. So just imagine what those numbers are now with gold at 4,200. In terms of
right.
cash flow and revenue and profits and all that sort of thing. And of course, then that means the lower grade stuff that maybe wasn't profitable at 1,600 is going to be very profitable at 4,200. So there's all that can expand the resource and what you can mine as well. So, like in case of you guys, like how much of the silver that you have, now is even much more economic and profitable at 57 as opposed to, 17. And it was just a few years ago, silver was at 17.
Well, we ran our resource at $17
Yeah.
up
So
at
yeah.
the historic silver mine. I mean, the really nice thing about the Dios Padre deposit is just the width. The width combined with the grade really makes this stand out. In our very first hole, that piece of core that you showed, that hole intercept was 36 meters of 6.8 grams of gold with
Wow.
copper and
Wow.
silver. Hole 21 was 38 meters of 7.3 grams of gold. So if we're even close to that, I mean that makes it you're not mining some narrow vein where you have a lot of dilution.
Yeah.
In a structure that wide, it just makes for more economic mining overall as a general principle. And we know that the grade is very consistent. It's not just 2 meters of very high grade and then a barren patch. It's very consistent throughout the entire section. So it's a very interesting deposit. And one thing that we have to get back to is there has not been a lot of money spent on exploration over the
Yep.
last
Yep.
10, 15 years.
Here's yep.
The majors pulled back dramatically. They weren't buying anything for the longest time. Now
No,
they're starting to buy production because that moves the needle a little bit for them.
they made a lot of mistakes at the top. They did a lot of M&A in like 2011 and then wrote down mines and got rid of them. And like you said, didn't do their own exploration. And a lot of them took on a lot of debt because, after financial crisis, we had these zero interest rates and that trickled down to a lot of the major mining companies, which have good credit ratings and the whatnot. So if you go look at companies like Barrick and Newmont, they spent a lot of the last 5, 10 years paying down debt or just, rather than exploring, or you're saying like putting new mines in production. So now with these prices where they are, now they're kind of scrambling to do M&A, to take over companies. We saw Coeur d'Alene is taking over New Gold. We're seeing all this sort of, I think we're going to entering the M&A part of the market. And you can correct me if I'm wrong, but I just remember in 2010, 2011, there are a lot of companies that were getting taken over in junior mining based on some good holes, like not even 43-101, not even resources, because the market was good. And the majors wanted to, or mid tiers wanted to take that over before, because they were, the thought process was, well, by the time these guys have a huge resource, the stock's gonna be 5 or 10 times where it is now. So we should get in now. And I think you'll see more of that as well going forward.
Well, they issued high price paper to buy medium resources.
Yeah,
I don't blame the majors as much as some others might because I know what kind of pressures they were facing at
of
the time
course.
to expand. I mean, these pressures come from shareholders.
Yeah,
So
yeah,
the
yeah.
same shareholder that one year is telling you to expand at all costs, and they force you to listen to them as management. The next year, they're telling you to pull back, rein in the horns and cut costs. So it's difficult to withstand that kind of pressure
Oh,
from
and
your
like,
valued investors when they're just following the market. You have to lead the market, and that can lead to some acrimony sometimes when you're saying, no, I know what's best for you, and the shareholder says, no, you don't. So
yeah,
it's an interesting, kind
dynamic.
of dynamic going on between, the longer term versus shorter term thinking.
Yeah, because
But
I remember in the late 90s, we'll kind of end off on this note. Newmont took over Battle Mountain. I don't know if you remember that. This was like in 98, 99. And it was right at the bottom of the market. And you don't see too much M&A there. And that was a great move because that mine ended up producing, a lot of cash flow and profit for them. But in this, like I said, this last cycle, Newmont was just paying down debt instead of doing M&A. And now everyone wants M&A because gold's 4,000 and silver's over 50.
right, and they can't find good assets. The best time to buy good assets is when nobody wants them, or they're having a hard time
Totally.
financing for some
Yeah.
reason. But
Yeah.
nobody does that because their shareholders would say, "Oh, pay down your debt." So
Yeah. Yeah.
you almost have to do what the opposite of the crowd wants you to do in this market. But you suffer for it sometimes if you don't do what they want. So,
Oh, sure.
our goal right now is to drill this and sell it. I don't want to be subject to those types of pressures or whims of shareholders. The
And this is
best
the
thing
last
to do,
the last chart I'd like to show that I talked about. So this is the
yeah,
CDNX, which is kind of the only like real gauge we have for junior miners. Like the GDXJ is junior miner, like smaller miner producers. But those
right.
companies a lot of times have market caps in the billions of dollars. So what I'm trying to show, what I talked about earlier, yeah, you said about 3,400 was the top here in 2007. And then we've spent really the last 10 years kind of basing between about 500 on the downside, just over 1,000 on the upside. We actually slightly went above 1,000 on this little move recently, but like you can see how much further we have to go on the upside for junior miners. And remember, of course, if you adjust this for inflation, there's been a lot of inflation in the last 20 years. You're talking like this index could quadruple from here and just be at its inflation adjusted high of
Oh, for sure,
2007.
David. Look at that chart. I mean, I'm glad you're showing this chart because look at it. That starts at 2001. That's post-internet bubble
Yeah.
contraction when nothing was happening with anything. Then
Nope.
you get into especially in the mining market. Then all of a sudden, 2002, 2003, mining started picking up again.
Yeah.
And then you get into 2007, which was the peak. I mean,
Yeah.
even the GDXJ and the Huey
I'll show you
peaked out
GDXJ just quick.
right about
You
then,
can
and
see
then they
that.
started
Well,
declining,
we'll actually look at the
unfortunately.
GDX. Yeah, GDX, you can see there was a slightly higher top here in 2010, but actually, if you did the ratio of gold miners compared to the price of gold, it was 2006, 2007 when that ratio peaked out.
Yeah,
Yeah, yeah.
yes. If you go to the Huey, you can see it in
I'll
I think
get
it
the
was
QE
2010 that it actually,
peaked.
even though
Yeah.
the price of gold was going up. Yeah, see, yeah, they're 2010, 2011. Even though the price of gold was going higher, uh, things peaked out before and the price of gold just started dropping after that.
Yeah. And like I said, if you
So
did that ratio, like the price of gold was much higher here in 2011, it was like 1,900 at the top. And here before the financial crisis, it was only about 1,000. So you can see that even that move wasn't like I said, the
It
miners,
wasn't a big move. Yeah.
yeah, it wasn't a big move. And I remember like I had a few stocks that did very well in 2010, 2011, but like as a whole, I did much better in this time frame in '05, '06, '07.
Yeah,
Yeah, I remember
definitely.
that. Yeah,
And
yeah.
then it was a struggle. Then you got put on death watch if you're a producer.
So yeah. And then we're
But
gonna
you
go
know, the
back to the
problem is nobody's
CDNX.
got any money. When you should be buying, the
Yeah.
sentiment is against buying other assets,
Yeah, like
and the money isn't there because you're struggling to pay off debt, right? So yeah, it's a funny market. We're influenced heavily by the market itself and what the market wants. But sometimes you have to be a little ahead of things. And my take on it has been that you're far better off longer term, judging by some of the prices I saw in the last bull market in precious metals. You're much better off being in the exploration stage because we were a producer at Timmins Gold. And the exploration companies were doing every bit as good as we were, even though we were churning out cash.
yeah,
So
yeah.
yeah, our goal here is to drill this and sell it. I do not want to go into production again. We want to make this, we want to drill off something that a mid-tier or major would be interested in. And they're going to get pressures very quickly here. They're going to get pressured by their shareholders, by the market to get bigger. And that's when you want to be selling to them. When people offer you good hard money for your asset, that's when you sell to them.
And just to end off on this note, like Bruce isn't fly by night. Like he came public in like I think 2022, right?
Well, we
And
bought the asset in 2017.
yeah. So you were
So it
during this.
wasn't easy in 2018, I'll tell you.
Yeah, I tell you this.
2018, 2019, they were not easy years.
Yeah, these periods here where you see the CDNX is like 600 and basically doing nothing. That's when Bruce was buying assets and taking his company public. So
Yeah.
yeah,
So it's only the last year and a half. And this is something I think that a lot of people are going to tune into. When you look at that chart, we're right where we were in a much smaller market with a lot less capital available overall across all the markets. And with less inflation, we're right back to where we were in the post-internet
bubble. Yeah,
contraction
yeah.
bust. That's where the index is. I mean, that's crazy. So it shows you there's got to be some big value in the CDNX going
Yeah,
forward.
and if you look at it this way, in that post-internet bust, the S&P was south of 1,000. The Nasdaq was like, I think the bottom was about 1,100. Of course, the Nasdaq now is way much. I think it's 20,000, and
Yeah.
the S&P is getting close to 7,000. So that just shows you. Well, let's just quickly. I'll just get the.
You're a chart guy. I can see it.
Yeah, I'm a chart guy. That's what I do. So you can see this. Look what the Nasdaq has done compared to the CDNX. So
Yeah. Yeah.
yeah,
Just
yeah,
some of that money comes into the sector. Look
yeah,
out, right?
yeah. So okay, Bruce, thanks for having us, and hopefully, that core looks fantastic, and that translates into some good results, and yeah, hopefully, and a higher stock price.
Yeah. Yeah. I just want to put a slight caveat on here. Even though visually we've got similar core with high grade, we haven't assayed it yet. So we
Yeah,
should
of
be
course.
getting
Yeah,
assays out it'll take a little while. We're getting assays back fairly quickly,
yeah.
but everything shuts down for Christmas down there. So maybe the new year we'll be getting assays out.
Yeah, that's fine. Yeah, everything kind of in all markets kind of gets dead between that Christmas and New Year's week. So okay, thanks for coming on. That was interesting. And it was great. By the way, like, just end off now to really end off. Yeah, it was really nice to meet you because, like you said, I live in the Bahamas. You live in Vancouver. It's kind of tough to touch base. So I get to meet you at that, and I'll be going to that Nassau conference every year because it was a great conference.
Yeah, I thought it was really well put on. The Centurion guys, you can tell, really care about the companies they
Yeah,
finance. So
and
it's a
and
good show to go to.
you can tell with those guys, it's called Centurion One for people interested. They're taking large positions and they're not just looking to a 50%, 100% gain and, churn it. Like they're really looking for the 5, 10 baggers and to be in for the longer term.
Absolutely.
Okay. Take care, man.
Okay, all right, see ya. Thank you.